Good afternoon. My name is Josh Dvorak, and this is a presentation of the financial analysis of Nike. The purpose of this presentation is to present information and draw conclusions about Nike on a financial standpoint. This presentation provides information on Nike's financial situation and how they compare with other companies in their industry. This information can be very useful to the investor thinking about investing in the stock market. This information will help the investor make educated decisions based on an analysis rather than just speculating. Now, without further ado, let us begin. I hope you enjoy this presentation. So first, let's start off with the economic analysis at the international level. And so let's talk about the GDP. So the GDP, the gross domestic product of the world, has been declining this year due to COVID-19. The pandemic has shut down businesses and slowed things down, resulting in a decreased GDP. So that is bad, but it's kind of on the upswing now with a reopening of businesses, and as things are slowly reopening, the GDP will continue to rise and get back to normal. The unemployment rate has also gone up, but that's starting to decrease with reopening of businesses as well. Also, the COVID-19 has also caused stock prices to decrease, which is bad. And then also, COVID-19 has caused international business to be a little more difficult because different countries have different restrictions, and so that is causing less trade. But things are starting to pick up and improve, which is good. And then also another thing affecting the international level is the 2020 U.S. elections on November 3rd, 2020, so it's coming up here shortly. But depending on who gets elected, that could affect trade, regulations and laws, which can affect business. So that's our economic analysis at the international level. And let's go over to the national level. So a lot of things are with the international level as well, but in the U.S., we can look at the economy. It's a free market economy, capitalist. The government has very limited regulation and power with the economy, but they will help when things are starting to decline, which is good. So the U.S. economy is pretty good right now. COVID-19 has caused the economy to go down, but that's continuing to rise, just like at the international level, as businesses and things begin to reopen. Like I mentioned before, the 2020 elections coming up here on November 3rd is going to affect the national level. And inflation, as you can see here, has gone up since 2015, so that's not great. And then also the exchange rate, if you compare the US dollar with the euro, it's about $1.18 to the euro. So that's kind of gone up and down over the years. But yeah, so that's kind of the national level economic analysis right now. So now let us go forward to the capital market analysis. So the stock market volume over the last couple of years has remained steady, which is a good indication that the stock market is a solid place to invest. And then return. Let's see here. So last year, return in the stock market was 19.42%, which is up from 9.54% in 2018, which is good. So that's a sound investment, and that's a positive thing. So the stock market is looking good. The bond market, the return is a lot less. It was 2.8% in 2018, or 2019, sorry. But that's also a safe investment. So that's how those are looking, which it's both of these, stock market and bond market, are safe investments right now. And as you can see, COVID has caused the stock market to go down, but that was in March, but it's slowly on the rise as well. So that's a very positive factor. So now let's talk about the industry analysis. So industry growth rate. Nike is part of the sporting and athletics good manufacturing industry, which is growing, which is a good indication that this is a good industry to invest in. Companies in this industry manufacture and sell. They produce a variety of shoes, footwear, gear, apparel, things like that. And as a competition in the U.S., Nike is the industry leader. In 2019, their sales revenue was $39 billion. Adidas was $25.9 billion. Under Armour was $8.5 billion. So that's how things are looking right there with Nike's industry. And also, I want to know about industry analysis is that this industry, the sporting and athletics good manufacturing industry, is largely affected by trade. So different laws and regulations will affect that. That's why a lot of companies will have overseas factories because it'll lower costs of production. So there's the industry analysis. And then the company analysis, business strategy analysis, the company and its business. So Nike designs, manufactures, and sells athletic footwear, apparel, and gear. They are the official sponsor of the NFL, NBA, and MLB. And they are also the official sponsor of a lot of colleges in the NCAA. And then also their stores, they have 384 stores in the US and then 784 internationally. So the store, Nike is very international, and they do have their foot in a lot of these major sporting events, and they also sponsor a lot of individual athletes as well in different sports. So that's how the company is looking there. And then main activity. So Nike, their main activity is producing, designing, manufacturing footwear, apparel, and gear. They do have product diversification, so of course they're known for their Nike shoes, and then also they are very diversified. They have different gear, they make different apparel, basketballs, they make tennis rackets and all those kind of things. So they're very diversified, which is really good for this company. Shows that they're safe, they have their foot in many doors. And another part of the company analysis is their strategies. So Nike they do strive for a higher quality product, which causes them to have higher prices. And part of their higher quality is innovation. Nike is really committed to innovating. And an example of that is their Nike Vaporfly 4% here. So Nike created this shoe. They put a lot of effort into creating this carbon-plated shoe, which a lot of other shoe companies have followed them. And so, but they're really a leader in this type of shoe. It's a racing shoe. And so innovation is really important, but they will have higher prices for higher luxurious products. Now let's talk about the quality of the management. So Nike has top quality leadership. A lot of them have had other experience in other top companies. They did recently go through, in the last year, a management change where Mark Parker, the CEO, he's still on the board of directors, but John Donahoe is now the CEO. Mark is still in the board of directors, and the stock price hasn't changed at all through that transition, so that's a sign that the leadership is still continuing to work well. Productive capacity and property. So production factories are in 41 countries. World headquarters are in Oregon. They also have headquarters in the Netherlands, Argentina, and China. And then also they have their website, so they sell a lot of products through their website, which reaches the world. So that's that. Competitive position of the company. So as I mentioned before, they are the industry leader in the US. They do strive for luxury and quality. And in 2014, they did a market analysis research study, and where Nike went to their customers and they asked if customers were willing to pay more money for a higher quality product, and most of the customers said that they would. So Nike found out that they could increase their prices of their products, which is what they did, and people are still willing to pay for them. And the life cycle of Nike, so Nike is in the growing stage. They were started back in the 60s, but they are continuing to grow. They have more subsidiaries, such as Nike owns Converse, Hurley, Air Jordan, so they're growing that way. And like I mentioned before, innovation is really important for Nike, and so they are continuing to grow and develop in that way as well. So here's the growth. So that's where they're at right now. And the business valuation. So this is really good for Nike. You can see the market value of the company in billions. And so in 2016, they're at 106. Then 2017, 89, 102, 115, 179. So a big jump there. So Nike has a major increase in valuation, which is really important and shows that they're a strong company and safe company to invest in. So long-term outlook. There was a ton of analysts who they analyzed Nike, and they said that within the year that median stock price of 115, a low of 87, a high of 150. So the current consensus among these analysts is to buy Nike stock. The current stock price is 16.47% higher than the previous year. So that just shows that the stock price is continuing to increase and that it is a safe investment and one in which people should buy. So the balance sheet has shown that there's an increase in assets, which is good, increase in liabilities, which not as good, decrease in equity, which also isn't good. Increase in revenue is great. Increase in expenses, you'll have that with more revenue, and they still do have a net income. And comparative balance, that'll show about the same things, that you're showing an increase in assets throughout the years, and an increase in revenue throughout the years, which is great, and net income. And this is just kind of showing total non-current liabilities has gone up, which isn't great. So yeah, that's one thing to look out for. So now ratio analysis, credit ratios. So this is great. This is comparing assets to liabilities. And so Nike has great ratios there. And this is the liquidity ratio. So it's just showing that Nike can meet their short-term obligations. Profitability, they still have a profitability ratio, so that's good, showing that Nike is making profits throughout the years. And then the per share ratio, so the average price per share has gone up from $56 from 2016, 55, 72, 86, 97 in 2020. So that's showing that Nike is increasing in their stock price, which is a really good indication that they're a good company to invest in. The earning yield per share, $2, $1 to $1.60. So that's just, you're making money on your shares. Payout ratio is good. It's 57% last year. And then growth in sales, it's been down -4 this year. That's due to COVID, but the other years we've had a good growth in sales. So that'll be up after this year. And then stability, you have good indications there. And then other ratios, so inventory turnover. Nike doesn't have an issue with turning over their inventory and selling their inventory, which is great. So all of these ratios have been pretty good for Nike. The final evaluation. So after conducting this analysis, financial analysis of Nike, I've come to the conclusion that investors should buy Nike stock. Nike is a safe and sound company to invest in. This company has had steady growth in revenue and stock price, and as we've seen through the ratios and analysis of the management, we've seen that Nike is a safe company to invest in, and it'll just continue to grow and be good for your portfolio. So thank you, and I hope you enjoyed this financial analysis of Nike.